On face value, technical analysis could be one of the most confusing things in the world, but in reality, it's not. The goal of this video is to give you the easiest possible guide to understanding technical analysis. Let's go. All right, traders. So as we look at the charts here, it may look like there's a lot going on. It may look like so much confusion, but if you understand just a couple of things, this could get so much easier for you. The first thing I want to start with is the 4 ways in which we should be looking at the market. In other words, the 4 moves of the market. And they are as follows: impulsive moves, corrective moves, continuation moves, and finally, when the market moves side to side, or in other words, consolidation. All right, so we've established that these are the 4 ways that the market moves. Market moves impulsively, correctively, it moves in continuations, and it moves in consolidations. Now, what we want to do is identify these different types of movements on the charts so that each time we're looking at the charts, we'll be able to identify what specific phase it's in, all right? So let's start with this particular area right over here. So as we focus on this area, and I'll zoom in just a bit so you can take a good look at this. As we focus on this area, right, impulsive moves are coming straight out of an area of supply or demand. And we'll get into areas of supply and demand very shortly. But this would be an impulsive move coming straight from this area of demand over here. And as we continue to follow the pattern of price, we notice that price came back within itself. Notice the direction, right, of the next move, right? It's not going along the same path as the impulsive move. Coming back within itself, right, is what we would start to call a correction. Okay, so this next move that price does is what we call a correction. Very important when it comes to a correction. For a correction to stand firm and valid as a correction, we need a couple of things to happen. We need the end of a correction, or in other words, in this case, since we are on an uptrend, we need the low of this correction, which is right over here. Okay, we're going to say the low of the correction is right over here. We want to make sure that it does not pass the previous low from where the impulse came from. The previous low right over here already highlighted. And if we just draw a straight line from the previous low all the way through, we see that it did not pass the previous low. Now, you may be wondering, well, I see a wick over here. Technically, yeah, it did pass. But because price did not close, if you look at the body of the candle, right? Let's just take a look at the body of the candle. If you take a look at the body of the candle did not close below the previous low. And that for me is what would have to happen for me to classify this as passing the previous low. I need the body of the candle to close below the previous low. Okay, so because we did not pass the previous low, we consider this a valid correction. Now, coming off of the correction, the next move is what we call, number 3, a continuation. A continuation is a move coming off of the corrective move, or the retest in other words, and it goes along the same path of the impulse. We saw the impulse came off bullish, or in other words, came in an uptrend. The correction came the opposite way. The continuation is going to go along the same way. Okay, so that move would be called the continuation. So what we have here, what we have next is price is still correcting itself, but it's correcting itself in a specific way, right? And this is the 4th move, which we call consolidation. All right, so as we see here, price is not necessarily moving upwards, it's not moving downwards, but it has a side-to-side pattern that it is going along. And this is what we call when price is consolidating. At some point when price consolidates, price is going to break out of that consolidation, and we want to be prepared when price breaks out of that area, because there are a myriad of ways that we can catch a move of a price breaking out of a consolidation. Now, continuing on with the pattern, we're still on a bullish pattern over here, but we have to now wait for this consolidation to be over with. Now, as we get to this area, we see that price started to break the area of consolidation, or this area of resistance. Price started to break this area of resistance resistance, but still was not able to completely push off of the area. Came right back to the bottom of this area of consolidation before it finally pushed off and broke free and continued to the upside. So as price goes to the upside, again, it starts to correct itself just a bit more, right? Very small correction over here. And then we have a huge continuation to the upside. Okay, so if we understand these four things, the impulsive moves that come straight out of the area of supply or demand, we understand the corrective moves, or in other words, the retest that come in the opposite way of the impulse, and then we understand the continuation that continues along the path of the impulse, and also noting that sometimes we get those consolidations. If we understand those things, it makes it so much easier to understand exactly how the market moves and ultimately start understanding technical analysis as a whole. All right, guys, so as we continue along, let's continue to see what price does, right? We have our previous low that is right over here, and price comes all the way up, gives us a little area of consolidation again, but falls back down over here. However, it does not pass this previous low over here, right? Previous low was over here. Price went as far as this area, so we are still good and valid. All right, so let's continue to see what price continues to do. So we have a continuation over here. Then we have a pretty big correction over here. And then let's see what price continues to do. We have a continuation going all the way up here. Price continues along. It forms this retest, a funky looking retest, right? The low of that retest is actually down here. Okay. And then we have a continuation to the upside right over here. Let's continue along. Price comes down over here. All right, gets very, very close to passing the previous low. We see that the previous low was right around this area over here, but this is around the same area. We could say it matched the previous low, but did not necessarily pass the previous low. So that being said, it's still a valid retest. We are still on an uptrend so far. Okay, now if we continue along and watch this, right? So maybe we could say this is a small retest over here, and then we get the continuation all the way up. And as we move along and continue on this uptrend of retests, of continuations, we finally get to an area where it seems we need to examine if this uptrend is still actually an uptrend. So let's take a look here. This uptrend, the previous low, we said on an uptrend we need the retest to stay above the previous low. Previous low is right over here. However, when we get to this very next move, as we go on our way down, we see that the most current low is lower than the previous low, right? So that is the most current low. This is the previous low. We have passed the previous low. This is what we call, ladies and gentlemen, a reversal. So if we are looking to validate the reversal, if I know that on an uptrend that I'm looking for the retest to not pass the previous low, then a reversal, in other words, a reversal of an uptrend, in other words, a downtrend. On a downtrend, I'm looking for the retest to not pass the previous high. Okay, I'll say that again. For an uptrend, I don't want the retest to pass the previous low. That's what would qualify them as a retest. Well, for a downtrend, I don't want the retest to pass the previous high, because that's what would qualify it as a retest for the downtrend. So I will demonstrate. So we had to move to the downside right over here. So now, as I'm looking at the retest, I don't want the retest to pass the previous high up here. Okay, that would then classify it as a valid retest. If we take a look at the retest comes here nowhere close to passing the previous high, and then continues along this path and continues downwards. All right, gives us another retest right over here and does not pass the previous high of that. Previous high is right over here, does not pass the previous high, and then we get a big move to the downside, ladies and gentlemen. That is a perfect example of how to start reading the market. If you start understanding these different types of moves and understand how they work in both an uptrend and a downtrend, you start to understand the grand majority of technical analysis. Now, another thing to note, I spoke previously about supply and demand areas. Whenever you are following a trend on the charts, you usually want to start in an area of supply or demand. So let's start with the demand. A demand area is an area where buyers like to buy an asset in surplus, usually an area that they classify as a quote-unquote discount area. So you tend to see a large buy coming off of that area, and that's what we call a demand area. So this particular area where we started this trend is what we call a demand area. Okay, now demand areas tend to form areas of support. Okay, because as price returns back to that area, what tends to happen is that buyers again want to buy off of that area. So if you take a look over here, if we just draw a box in this demand area, we could see that as price came off of this area, right, we had a whole bunch of buyers buy price from this area, but it came back down, and as it approached this area again, it created an area of support that was very, very strong because buyers again wanted to buy price in this area in surplus. Okay, now the same is true but opposite for a supply area. A supply area is going to be an area where there's a huge sell-off, such as this particular area right over here. Huge sell-off once we get to this area, because those who are watching this asset or trading this asset probably do believe that it's a little overextended in price. So there's usually a huge sell-off, as we can see signified here by the sell. But as price starts to return to that area, what starts to form is an area of resistance. Okay, so each time we get back to that same area, we'll tend to see a lot of times what we call a sell-off. Okay, and understanding support and resistance and how it obviously incorporates with supply and demand can help you tremendously in predicting possible price movements that will happen in the future. Now, last but not least is, where do we enter? So now we understand the basics of technical analysis, but where do traders actually enter their trades? Now, that's a good question. And if you look back on these trends, let's look at the most plausible places to enter. Okay, now when we talk about entries, the best place to enter is going to be at the end of a retest. Okay, whether you're talking about an uptrend or a downtrend, at the end of the retest is going to be the best place to enter if you're talking about the best price. So that being said, after we get this big impulsive move up here and we come back towards this area and we retest, as this retest has ended, the best entry if we're looking to enter this trade for the buy is going to be right over here. So right over here is going to be our entry. Okay, and as we enter, we take this trade and ride this trade upwards, and we'll get about 50 pips on this trade. And you continue along. If you're on a trend, you want to continue along and buy at every end of a retest. Okay, so as we look along this trend again, let's look for more areas where there could be possible entries. So in this area over here at the end of this correction could have been a possible entry. Right here, entry. All right, and we continue along, and the next entry is going to be again at this area right over here for the buy. And this is where we continue to milk on this trend, right? Each time is giving us a possibility for the entry. So in other words, each time the retest is valid and it follows all of the parameters that consist of a valid retest, we could take an entry and continue along that trend until that trend is over. So after that trend is over, as we had already seen over here, the trend finished right around here, right? But a new trend started. So right around here, traders probably thought price was a little overextended in price. So in other words, they believed that this was a supply area right over here. This area was a supply area right over here. So as traders believed that this was a supply area, there's a big sell-off, and as a result, the big sell-off completely reversed the trend. So we saw that this low passed the previous low, and we classified this again as what we call a reversal. This area over here we classify as a reversal. Okay, so after we say that this is our potential reversal over here, so now we need validation that it indeed is a reversal and we are going to go along a downtrend. Okay, that confirmation right here is going to be the retest that we get on this downtrend. Okay, this right here is the retest, but also confirmation. So it's confirmation of the reversal simply because this high, the high of this retest, does not pass the previous high of this move over here. Okay, so now if I'm taking any sell positions, I want to take them now at the very high of the retest because I am on a downtrend. Okay, so if I'm taking any sells, this is going to also be my entry right over here. This is my entry right here, entry. Okay, and let's look for a couple more entries. So as price comes down and gives us another retest, right, and the retest shows us its high again, here's another entry right over here, entry. okay, and so on and so forth, and we get a big sell-off. This will probably be the biggest move of that reversal trend, and we could get paid handsomely. All right, this reversal was about 90 pips, over 90 pips. That is quite a move right there. Okay, so this does get deeper, don't get me wrong. There are many things that we can add to this, patterns and different tools like Fibonacci retracements and MACD retest, just to try to hone in on how exactly do we know that a retest is about to finish? How do we actually try to pinpoint that location when that retest is just about done, so that we could take the best entry possible? There's many different details on how we can hone in on that. But the most important thing for the basics of technical analysis is just that you know and understand the different types of moves that the market has, number one. Number two, understanding that these moves tend to come off of supply and demand areas. And number three, just understanding where we're trying to target our entries when it comes to these moves after seeing them and identifying them ultimately. So once you have mastered these things, then you can definitely go to my other videos where I go more in depth on different tools that can help us understand when retests are going to be over, how to better identify different trends, different types of reversal patterns that we can see on the charts. All of these things are going to help and add to you being a great trader. But ultimately, this right here, just this right here, could ultimately make you tons and tons of money, ladies and gentlemen. Believe it or not, in my first 3 months, I was actually able to turn $400 to $4,000 in one night just following this trend, right? Following a downtrend that I saw, every time I saw a retest, I stacked into that trade, re-entered and re-entered and re-entered to the end of that trend. Just like that. So if you actually follow the basics and master the basics, that alone can make you money in this market. So I hope you guys enjoyed this lesson. I know it was lengthy, but there's tons and tons of value in the basics. If you really understand how the market moves, even on a basic level, you'll be ready to make money in the market every single day. So if you enjoyed this video, please like, share, and subscribe. I'd really appreciate it. And until next time, guys, peace.